watching famous games on YouTube.
So, yeah, crazy times in the market today with apparently there's going to be the Fed speaking at a virtual Jackson Hole conference tomorrow. And there's an article on barchart.com that you might want to check out where it talks about how the Fed is possibly going to say something about not raising rates to combat inflation or changing their normal strategy of possibly tightening to combat inflation for a strategy of kind of just leaving the rates towards zero, even if we see signs of inflation. But beyond that, we've just had a market that the VIX futures just will not back off beyond the front month here, October, November, and stuff. Even though the realized volatility of the S&P 500, the SPX, is very low. Excuse me. My one vice in the world is Diet Coke, and it's giving me some sort of gas, I guess. I am not sponsored by Diet Coke, but I will accept Diet Coke sponsorship deals. The vol stays secure, and my feeling on this is that people have made a lot of money being long, right? More than they thought they were going to, probably, being long these tech stocks. And so I think that people don't mind at all pouring some of that money back into buying puts to protect themselves. You know, you've had, despite a lot of people thinking it wouldn't happen, as far as the stock market's concerned, you have had that V recovery, right? The market's gone to all-time highs. And people want to protect those gains, especially in these high-tech ones like Tesla. Let's just think, Tesla has gone from, what was it, $365 all the way up to $2,130 right now, right? Tesla and Apple ready to split next Monday. Apple above 500 today. And but in the last little while, we saw not only the VIX go into positive territory after being negative all day, we also saw a buyer come in the S&P. We saw put buyers come in the S&P, buying puts that expire on Friday, in 2 days. Very specific trade, betting that we're going to go lower in the next 2 days. And, I don't have all the information on that trade. It could be a closing trade. Who really knows? It could be part of some other strategy. So it's hard to read too much into this stuff. We don't know that much about it. But if we do pull up really quickly for you, the time in sales for the S&P, you can see last time we did this, you saw a bunch of put buyers. You can still see put buyers in here. And there's been several interesting articles on this topic. You've got notable people coming out and talking about how this volatility just won't die. Let's go through some of them really quickly here. I know your time is value, so I'm going to get you out of here real quick. All right, Eli Mintz. You know who Eli Mintz is? He's the guy who runs the VIX Central site. Okay, he came out. He doesn't usually say too much online. He came out with this 2 hours ago. Okay, something's got to give. VIX over 20, realized volatility under 10, and the future is basically flat as far as the eye can see at about 28, 29. Markets are treating the election as some singular event that will influence volatility way into the future, right? So this is it's just remarkable in that, contango has just been creeping up. And the reason for this is the front month future has to slowly curl down, but the front month future moves down in the VIX, and the other futures don't move at all, or move at a much lesser rate than the front month future. Let's go to SIBO blog for another article that came out. Now, this is from Kevin Daggett, who can't be a bad guy in my book since he's a Fish and Grateful Dead fan. and let's take a look at this from the 25th. Very spot on article, I would say. And definitely read this in your own time. I will leave a link to it in the chat here. But he's talking about the what happened with the COVID and the rally back. I saw another chart which I can't remember where I saw it, but it talks about how like a lot of the jobs have come back. It's the lower income jobs that have not come back. Oh, here's this one he has showing how the lower income jobs just have not come back. But very interesting article here by Kevin Daggett, kind of describing the situation. But this situation gets more extreme, and we have seen what is up, David Modell. Congratulations! I haven't had a chance to tell you in person. Congratulations on your 50 grand milestone. Everybody go subscribe to David Modell when you get the chance. But just a really it's an enigma wrapped inside a quagmire of a situation here with the VIX all of a sudden popping. You've got the SPX up over 30 points and the VIX comes up and is up on the day. However, usually if you had the VIX up on the day, you would have confirmation by the VVIX. When you listen to Don Kaufman talk about stuff, he'll be saying when the VVIX is up, he'll be saying the VVIX being up is professionals hedging themselves. Well, VVIX was down almost 2 points at one point today, and it's certainly not up right now. So professionals are not hedging themselves. But we continue to see the VIX be very strong in the face of a continued rally. If you've got the E-minis up a point or two and the VIX is slightly up, that's one thing. But, E-minis up, or the SPX up 30 points, and VIX still strong. So it's really remarkable, and it's hard to interpret. As for me, I'm staying short UVXY with contango approaching 17%. What that effectively means is UVXY is decaying by $1 a week. So that gives us some breathing room to be wrong, right? With it decaying at $1 a week, that is pretty fast decay. And but at this point, it seems like it's all going to come out at once because we're about 3 weeks out from expiration. But once we get closer to expiration, that front month future has to move down lower. It was almost 4 points away from spot earlier today. Now it's back down around 3 points away from spot, like 310 right now. But that's got to move lower. And it's every time we see contango move up from last time I talked to you, I think it was like 13.5. Now it's up to 17, 16 and 17% contango, which is a huge number over time. Almost insurmountable number if it can stay at this level for a period of weeks or months. We will definitely see VXX take out the lows sometime soon. Remember, VXX, the low before this whole COVID stuff started was around 13. If we go back to pre-COVID time, so it was February 13.15, if I get out of the way, was the low in VXX. We can get back to that level. If contango stays like that, we will get back to that level quite quickly. Let's check in on our old friend TVIX, because I like to see what would have happened if, and for those who stayed short TVIX, where would they be now? Remember, TVIX got up to exactly 1,000 back in March, but now down to 61. And TVIX's goal to get the all-time low is 38. So it still has a way to go. TVIX decays faster than UVXY because it is a 2 times leveraged product, so it's got that drift decay on top of the contango decay. So probably look for TVIX to break 38, 33 before VXX breaks 13. And let's take a look at our friend UVXY. So UVXY 1956 now, looking to break 10 to make it back to the all-time low. And that really would be a sort of reverse V-shaped recovery for VIX products if they could take out their all-time lows this year. And we have enough time left in the year for that certainly to happen if things continue like they are. But just it's a kind of a scary situation with vol being steady. But if we can understand why that's happening, then it's less of a fear for us. I have to think bears are getting crushed repeatedly over and over again, and I'm happy I am no longer on the bear side. Very happy. Look at the Lulu, which I was bearish on for a while, has just every day it's up $5. Look at it. Lulu now $381 earnings after the market close on September 8th coming up. Day number 3 of the Republican National Convention tonight, folks. And that's it for your brief update on volatility. The short version is that volatility is very strong in October and past then, and continues to be very strong, uncharacteristically strong. And the fact that it's hanging that strong in October versus the front month is creating a big contango, a big drag situation where these products are decaying very rapidly. So if you're thinking about getting long them, be careful because it'll cost you. And if you're short them, when this VIX refuses to die and it starts to climb, when you've got these indices up, that's a warning sign. That's a red flag. When the VIX is up with the SPX up 30 points, that's a red flag that something might be amiss. So take it to heart and manage your risk appropriately for you. I can't tell you what proper risk management is for you. It depends on your own situation, but don't look at other people's situation. Look at your situation. Manage your risk appropriately. Thanks for watching. I'm going to let you get back to it for the end of the day, but just really remarkable. We're 3 weeks to go till expiration, and contango stretching over 17% is really remarkable. Thanks. Bye.
You're watching Famous Dave. On YouTube.
Yoga pants cures COVID. Ah, that's good. I guess so. With Lululemon, you mean? Yep.